Hey guys, Happy New Year. Glenn and I are here just going to give you an update of what's happened in the 2022 marketplace last year and also a market update for December of 2022. So let's kick it off and start talking about what happened last year. Glenn, do you want to start us off?
Absolutely. So 2022 is obviously a very interesting year. I mean, the year began much the way 2021 ended off. Things were still moving at a much quicker pace than they are right now. And then interest rates. I mean, that's been the biggest talk of 2022. So the interest rates, they went up 4% in a very short period of time. As a result of that, it was due to inflation, right? The government trying to reduce inflation. But as a result, values came down, and it also caused a lot of uncertainty out there with buyers, caused some confusion. So some people kind of stopped dead in their tracks. It's kind of an interesting, we kind of went from one extreme to the other, right?
We really did.
No.
We sort of started off, with a bang in January. It was gone. It was quite active. I think it was probably one of our most active Januaries of our careers. And around, April, May, it slowed down ever so slightly. And then all of a sudden we did see the interest rate hikes. So it really slowed people's sort of their pace of the market. Of what it was for the past 4 or 5 months and even years prior to this, and we definitely had a slower last quarter, that's for sure.
Yeah, I mean, looking at December stats, I mean, Brittany and I don't really talk numbers too much unless they're absolutely like relevant, but I mean, December numbers are out, the real estate board put out, and yeah, everything is down, number of listings, number of sales, right? So and it's kind of interesting. Maybe it's, I mean, as far as the prices go that have come down, I think we've seen the biggest drop that we're going to. But what's interesting is that people seem to be, generally speaking, right? People seem to be more focused on the interest rate as opposed to the price they're paying for the home. So in one market, everybody's didn't like it, but they got used to competing, right? Super low interest rates, like super low, free money, everybody's saying, right? They're just
very low.
Did whatever they had to get a property, like within reason, so to speak. So now we're kind of on the flip side of that. And I think because it happened so quickly, it naturally caused confusion. I mean, even amongst us, we're kind of like, holy smokes, okay, what are they going to do next? Are they going to keep going down and all that sort of stuff? But, we always try to put things in perspective. And one thing, I think that maybe people are losing sight of a little bit is what their actual payment is. So of course, you want a lower interest rate, but when you have a higher interest rate and a substantially lower purchase price and your payment's about the same, then theoretically you've got more room for growth on the value of your property. And then you can just refinance.
Very much so.
Come down again. I mean, rates will come down again at some point, right? But so you can just then refinance at the lower rate, but you got the property at the lower price. So yeah, but confusion, right? I mean, maybe that's the word of 2022, right?
Yeah, confusion. A lot of ups and downs, that's for sure. But we've seen this historically happen before in 2019, end of 2018 into 2019. This happened as well too. People just kind of backed off for whatever reason that they did, because they felt like prices were going too high and the pace was way too fast, and they're like, something, it's got to end at some point. So people kind of held off for a while, and then all of a sudden we saw everybody come back to the table at the same time again. So I think the biggest thing is that what people are waiting for is they're going, okay, so prices have dropped off, depending on what area that you're in. They've dropped off anywhere from, say, 5 to sometimes, there's some places in the valley that have dropped 20%. So from the high, which was in, March and April and May. So if you're looking at that, it's sort of, when we have to step back a little bit and go, okay, our interest rate's going to rapidly decline. right away. If say they combat inflation and by the end of the year, our interest rate's going to come down, 2% right away. Likely not, right? We're probably going to see a steady decline as we had a steady increase. So,
Right.
we all, if we look at history of 2019 and everybody came back to the table at the same time, what do we think that's going to happen when interest rates fall again? Are we going to see all those people come back to the table, and are we going to be in competing situations again and inventory being low? I think people are sort of, as you're saying, are sort of losing sight a little bit of going, okay, what's holding you back? If your payments are generally the same, or if they're a little bit higher, you're going to have more equity in your property. So I think there's some strategies where you can use this marketplace in your benefit and
Right.
not be in a competing situation. Obviously, with stress tests, and there is certain things where you're not going to, when you're getting a mortgage, you're not going to be able to qualify for as much as you did before. And we do understand that. But at the same time, prices have come down. So you may be able to still qualify for the same type of property. You just have to explore, and you have to talk to your mortgage broker, mortgage specialist to see what the numbers look like, because they're maybe not as scary as you think.
Right. Yeah, and I think that, I mean, that's a great point too, right? Because that's just exactly it. And yeah, they might not be as scary as you might think. And yeah, it's kind of like, I mean, yeah, when people are confused, yeah, you just kind of, you get frozen a little bit. And I've said this so many times in other videos and that sort of thing. And I guess, for this year, moving into 2023, of course, the predictions can be wrong, right? Even when rates were really low, didn't the Bank of Canada, and they're just like, yeah, don't worry about it. We're going to stay here. We're going to stay here, right? Well, okay. And then
They
there was
didn't
an
even
influx of money.
tell us that they were going to raise them.
Yeah.
They thought we were going to be good until the end of the year.
Mm-hmm. And then there was like an influx of money too. Not to say that shouldn't have happened, but there was. And then, yeah, spending obviously. And then here we are. So anyways, point being, predictions are just that. They're just predictions, right? So we can obviously use the history to help formulate a thought about the future, but we don't really know what's going to happen. But let's just, the predictions are that the rates could go up again early this year, another 0.25, they're saying, and then likely level off. And then to your point, okay, so say they level off, and late last year, they were saying up 0.25 early 2023, and probably start coming down end of 2023, early 2024. But maybe they'll just flatline for a little bit longer and then start to slowly come down, right? So it could take, right? And then, like we were just talking about earlier, like a 2% interest rate. Like for us to get back down to there, is there going to have to be some other catastrophic event globally or what have you to have rates go back down that low? So is the norm going to be around that 3 or 4%, right? So then,
and that's sort of what they're thinking, that's sort of the talk, is that is going to be our new normal. So I think everybody needs to adjust their budgets to what could be our new normal for quite some time. And, because our interest rates were so low, people were qualifying for so much more. So I think that's sort of what the transition time, the confusion, I think that's what we're headed into right now, is that adjusting expectations.
Yeah. And, and even they go back down to 4%, like, is that 2 to 3 years out? And then, if you're waiting if you are really focused on the interest rate, like, are you really going to wait that long? There's so many different ways to look at the market, and there's so many different opinions. It's no wonder that anybody can be confused by it. But I think if people just kind of step back and say, okay, like, do I have job security? Do I have the capital? Yeah, I want lower rates. Everybody wants low rates and low prices. Okay, well,
of course.
Okay, right? Like, how's that going to happen?
Yes.
Right?
You can't have it all.
You can't have it both ways. So how much time are you going to wait or be out of the market before you make that move? And it all depends on everybody's situation. I mean, quite frankly, if I was downsizing, yeah, I'd probably sit tight. and see if, rates come back
Yeah.
down and that sort of thing, right? But certainly if I was entering the market or upsizing, I rather have the low price. Even if I was selling something and going up, I rather sell low and then buy the more expensive low or enter the market low. And I think that's where it is. So I guess what I don't want, my fear for people is that if you are in a position where you're ready to go, but you're just kind of confused, then please reach out to us or whomever, but reach out to somebody, talk to a realtor, talk to a mortgage broker, talk to a few people, and try and make sense of it all. Everybody's situation's different. We're not sitting here telling people that they should be buying right now. You have to, depending on your situation, but for a lot of people who have been in the market looking for the last 6 months or 8 months, right? Like those people, if they're frozen right now, then I think they should really think hard and just talk to somebody and kind of weigh out the pros and cons. But I just don't
Buyers may have a great window right now. I think there's a window, and and I think there with people's situation, I think there could be some really great opportunities for some people. And remember, the people that did buy in the high, don't panic as well, because historically our markets do go up. Real estate's a long-term investment. So
and you're not,
don't panic if you did buy in the high.
Yeah, and those people too. That's kind of like another thing. The fear was like then it was like, well, if I don't buy now, it's how much more am I going to be spending next month or next week for that matter, right? So there's no harm, no foul there, because you're not selling your property right now. So don't sweat that. You probably got a low rate anyways too, right? So at the end of the day, I would like to think that if you did buy at the peak and now your property's value's gone down, that you did buy within your budget and you can comfortably make your payments. Okay. So long-term investment. I bought, my place was like the height too, right? My first place. And that was just after, bought it. And then the mortgage crash, the subprime market in the United States trickled down here.
Yeah.
By the time I actually got my keys, my place was like $50,000 less than what I paid. And I'm talking, this is 2008. This is like not a big purchase price back then, right? But now, of course, it doesn't matter. So just to those people, you're going to be fine, right? So
you're going to be fine.
Yeah. So I don't know. In closing, Britt, just I think the message is don't let what's going on out there, the media and that sort of freeze you in your tracks. Like talk to somebody. We're here, no obligation. Happy to have a chat. Especially, obviously, if we're already working with a realtor, please reach out. And if you are working with a realtor and you're kind of frozen, just talk to them, right? Just pick their brain a little bit more. Hopefully you already are, but just try and make some informed decisions, and everything's gonna be fine.
Keep an open mind.
Yeah, no, good point. Okay, I think that's about it.
Okay, that's it. Well, happy New Year, everyone.
Yeah, happy New Year.